The Billionaire Blueprint: How Reagan and Thatcher Privatized Freedom. 1. The promise of freedom. They said free markets would make us free. Governments would step back, competition would thrive, and prosperity would trickle to everyone. Sounds clean, right? Elegant, efficient, like a law of physics. Except, in practice, it came with an entry fee only billionaires could pay. So what does that actually mean? It means freedom was redesigned as a luxury product. By the late 1970s, both sides of the Atlantic were in chaos. Britain's inflation hit 25%. America was strangled by oil shocks and 20% interest rates. The post-war consensus, big government, social programs, stable jobs, was collapsing. Into that storm walked two leaders with the same playbook, Margaret Thatcher and Ronald Reagan. Their doctrine? Free market salvation, courtesy of economist Milton Friedman and his Chicago school disciples. Government was the virus. Markets were the cure. All you needed was the invisible hand, that mystical appendage supposedly guiding everything toward balance. Only, when tested on real people, it turned out more like a fist. Footnote. The invisible hand turned out to be very visible, and it was holding your paycheck. 2. The Great Economic Purge. Thatcher and Reagan didn't just talk reform, they went full demolition mode. Thatcher slashed spending, spiked interest rates, and triggered a recession that gutted Britain's manufacturing base. Whole towns vanished. But she called it discipline. Across the ocean, Reagan passed massive tax cuts, dropping the top rate from 70% to 28%. They called it trickle-down economics. It didn't trickle. It shot straight upward like a champagne fountain at a billionaire's wedding. Within a decade, the top 1% doubled their share of national income. The middle class shrank. The poor worked harder just to stay still. Both leaders declared war on unions. Thatcher broke the miners. Reagan fired 11,000 air traffic controllers overnight. Modernization, they said. Translation? Labor lost, capital won. Wages froze, job security vanished, and speculation became the new national sport. Footnote. Trickle down was never a leak, it was a siphon. 3. The Great Sell-Off. Here's where the revolution got real. Privatization. Thatcher sold everything not nailed down: telecoms, airlines, gas, housing. Her right-to-buy program turned tenants into homeowners, temporarily. Decades later, those same homes became overpriced rentals, fueling a housing crisis Britain still can't shake. Reagan's America followed suit. Deregulated airlines, trucking, finance, even savings and loans. The result? Freedom for investors, bailouts for taxpayers. The 1980s became the golden age of deregulated irresponsibility. London's Big Bang of 1986 turned the financial district into a global casino. Wall Street joined the party with junk bonds and leveraged buyouts. Real wealth stopped coming from making things, it came from moving money faster than regulators could blink. Footnote. Privatization was sold as liberation, but what it really freed was liability. 4. The Soul Reprogramming Project. Thatcher once said, "Economics are the method. The object is to change the soul." Translation: make citizens think like shareholders. Self-reliant, competitive, allergic to government. Reagan echoed her perfectly: government is not the solution to our problem. Government is the problem. But here's the irony: both used enormous government power to impose their so-called freedom. They crushed unions with police, enforced austerity with central banks, and rewired society with bureaucracy. They didn't shrink the state, they repurposed it to serve capital. So what does that actually mean? They didn't make markets free from politics, they made politics a branch of the market. The 1980s weren't deregulation. They were re-regulation, written by and for the wealthy. Footnote. It wasn't less government. It was government under new management. 5. The global rollout. After the Cold War, the model went global. The IMF and World Bank exported it like a fast food franchise: privatize, liberalize, deregulate. Nations that followed the recipe got loans, and decades of austerity. Latin America, Eastern Europe, Africa, all became testing grounds for market freedom. But the first experiment happened earlier, in Chile under Augusto Pinochet. With advice from Friedman's Chicago boys, he privatized everything from pensions to education. Inflation dropped, inequality exploded, and dissent was outlawed. Thatcher admired him. He had proven what they all quietly knew: free markets sometimes need police states. Footnote: the invisible hand always works best when backed by a visible fist. 6. Freedom as debt. By the 1990s, the ideology was gospel. But freedom had been redefined. You were no longer oppressed, you were self-employed. Not underpaid, just an entrepreneur of yourself. It was brilliant marketing. Dependence became dignity, insecurity became independence. America became the poster child. Welfare was replaced with credit. Health insurance turned into medical debt. Education became a mortgage on your 20s. Europeans got safety nets. Americans got interest rates. The slogan free market slowly morphed into buy now, pay later. So what does that actually mean? You're not free from the system, you're free to owe it. Footnote: they sold freedom on credit, and the payments never stop. 7. The billionaire's paradise. By the 2000s, the transformation was complete. Capital outran the law. Tax havens bloomed like spring flowers. Governments became service providers for billionaires. When banks crashed the world in 2008, the bill went to the public. Losses were socialized, profits privatized. In 1980, there were fewer than 50 billionaires. Today, there are over 2,600 controlling $14 trillion, more than the GDP of every developing nation combined. They don't just influence politics, they own the arena. Tweets move markets, money moves laws, and power no longer needs a flag. The state didn't disappear, it was outsourced. Democracies became subsidiaries. The free market didn't fail, it won, just not for you. Footnote: capitalism survived. Democracy was the collateral damage. 8. The legacy. Thatcher and Reagan promised smaller government and greater freedom. They delivered something else: concentrated wealth and political dependency. Today, nations compete for billionaire approval, not citizen consent. When private fortunes outgrow public budgets, freedom stops being collective. It becomes collateral. The borders of power are no longer drawn on maps, they're printed on balance sheets. That's the real free world we inherited, a planet governed not by policy, but by portfolios. Footnote: they shrank the state, but what they really downsized was your share of the future.